Well, despite economic pressures, South Africa's vehicle sales zoomed ahead in the last quarter of 2022. So Transunion Africa has released its latest vehicle pricing index. It measures increases in pricing for new and used vehicles from a basket of passenger vehicles. New vehicle deals surged by 13%, while used vehicle deals decreased by 3.4%. However, the report warns inflation, consumer credit and other factors will pump the brakes on sales in 2023. Transunion Africa's Vice President of Auto Information Solutions, that's Kriben Reddy, speaks to us now about this. And Kriben, thank you so much for your time and good morning to you. Your stats, your latest vehicle pricing index, I mean, what does it necessarily say to the consumer and how they should be, I suppose, using their money when it comes to vehicles?
So thanks for having me. I think the first thing is, if we look at the vehicle pricing index, it's actually a very good indicator of supply and demand across the country. The message to consumers is that, if you're looking to get into the vehicle market right now, if you look at from a used vehicle pricing perspective as well as from a new vehicle pricing perspective, on the used side, more particularly if you're looking to trade in your vehicle, you would probably get a decent trade-in amount based on the quality of your trade-in vehicle, the condition that it's kept in. Used vehicles are always in high demand across the country, but there's always a lack of supply and a scarcity around good quality used stock. You should be cautious, though, when entering the vehicle market, whether on new or used vehicles. If we look at some of the headwinds facing consumers at the moment, we see that there's now fuel price increases again. We saw about 350 basis point increase in the interest rates from November 21 to December 22. And right now, consumer confidence is a big contributor, to vehicle sales, consumer and business confidence. And if you look at the impact of load shedding as an example, consumers definitely are fearful around entering the market and taking a big commitment like a vehicle. If you look at in 2022, we probably had about 160 days of load shedding in totality. The consideration is, do you put in a solar unit or an inverter or something to back up or give you backup against Eskom, or enter into the vehicle market and buy that new vehicle. So there's a couple of considerations, I think, from the consumer's perspective.
I want to focus now on demo models, on electric models, as well as hybrid models. What's the consumer behavior that we're seeing there?
Look, the demo model market, consumers have always been drawn to demo models. If you think of a vehicle that's 1 or 2 year old, the value proposition is extremely strong to a consumer, because that's a vehicle that you're purchasing at a reduced price to the new vehicle price, but it still would come with a warranty, a guarantee, etc. Typically, we see about 45% of the financed vehicles are actually demo models, and that falls into that 1 or 2 year old category. We're definitely seeing an uptick. Look, it's off an extremely low base. We probably did in Q4 about 1,500 new energy vehicles in the country, which is a combination of hybrids and fully electric vehicles. I think it's less about the number for me, but more about the direction. And it says that electric vehicles are being, is appealing to consumers. If you also look at the change of behavior of consumers and some of the barriers that might have been there a few years ago, and after COVID, if you're a consumer that's working from home, as an example, you're less likely to travel every day. You're less likely to, even if you have an electric vehicle, you're less likely to need it to be charged 100%, etc. So that range anxiety, the ability to have it fully charged, the barrier goes away a bit, and consumers are starting to look at it. Apart from obviously, the green impact and all of that, there is a consideration towards electric vehicles, definitely from the consumer side.
Right. Kriben, I think we're having this conversation also because, we're seeing that negative GDP growth and low consumer confidence suggesting something to consumers, which is quite important, as well as how, the economic trajectory may be looking for the rest of the year.
Yeah, look, that's a very interesting point. I think, in previous periods, we've done work to assess the correlation between GDP and new vehicle sales as an example. And what you find is, obviously the context that we're in now is through the period of COVID, we're actually operating on a very low base. But under normal circumstances, what you find is that to have a thriving or a growing new vehicle market, you have to have GDP around the 1% year-on-year growth level or higher. So anything above 1%, you've got growth in the new vehicle market. Anything below 1%, you obviously have, you then have a declining new vehicle market. And with the recent projections from SAB and many other economists around the country, we're probably going to be seeing GDP around the 0.3% mark. You will get, new vehicle growth, albeit, a lower GDP, but it's not going to be at the level I think that, some people might expect. It's probably going to be around 2 to 3%. And again, that's catering for coming off an extremely low base off the back of the last few years.
Yeah. So with that being said, and also considering the fact that, disposable income has come under so much strain, what does it mean for the consumer in terms of mobility and how they view vehicle purchases now?
Absolutely. I mean, look, I'll give you some stats just to give you an idea of the context that we operate in terms of finance agreements. A vehicle is the second largest purchase that a consumer would make, and most South African consumers, don't have the cash to go and outlay on a vehicle, especially a new vehicle. If you look at finance applications that go through the markets, you probably find that only less than 15% from all the major banks actually get taken up, not necessarily approved. So you could have a situation where somebody gets approved, but doesn't necessarily go ahead and take on that agreement. But only less than 15%. So 85% of consumers actually start the process, put in a finance application, but actually don't end up taking a vehicle on finance, which is probably the single biggest enabler or lever to vehicle ownership. What we're seeing, though, and what consumers are starting to consider is alternate models. What we're finding is that many consumers have the need for mobility in South Africa. I think that's true for many consumers, especially ones that commute back and forth to work, etc., but can't necessarily make the traditional commitment that a bank is looking for vehicle finance, which is typically linked to ownership of the vehicle. And what consumers are opting for is rather a subscription type model, as an example. So your requirements would be a little bit different to typical finance. You're also not tied into a 5-year or 6-year or 7-year agreement on that vehicle, and it's less about the ownership of the vehicle, but rather more about the usership. So if you think of, in today's economy, we've got consumers that have small businesses. You've got consumers that probably have 2 or 3 streams of income. These are consumers that might have been turned down on a typical finance application for ownership of a vehicle. But these alternate models are giving options to these customers and consumers to get into the vehicle market and actually have access to mobility without having to worry about the long-term commitment and the high interest rates, etc.
No, Kriben, it settles it then. I will be getting myself a bicycle. Thank you so much for all these stats and making my life a bit easier in terms of how I make that decision. But thanks for sharing all this info and the data by Transunion in the latest vehicle pricing index. Transunion Africa's Vice President of Auto Information Solutions, Kriben Reddy, thank you so much for your time.